Hello everyone, this is Rachel live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studios and you're watching The Market Movers. Well, while the fear over the highly contagious Delta variant of coronavirus is growing and denting investors' sentiment, an uptick in sectoral indices including industrials, utilities, energy and A-REITs are pulling up from the strings of the ASX 200 today. On that note, let us zoom our lens on the market performance on the first day of the week. Australian shares rose today, boosted by industrial stocks, as Sydney Airport surged over 38% after receiving a takeover offer of $16.7 billion. Firm commodity and oil prices lent weight to miners and energy companies. The industrial sub-index rose to its highest level in more than 60 months. That's after the country's only listed airport operator, Sydney Airport, received a bumper buyout offer from a consortium of infrastructure investors. Meanwhile, shares of Sydney Airport hit a near 1.5-year high of $8.04. Gold stocks advanced as investors weighed prospects for US Fed tightening its monetary policy. That's after a strong US jobs report, despite it showing a slight uptick in the unemployment rate. Prices of the precious metal strengthened against a weaker dollar. On that note, top gold explorer Newcrest Mining and smaller peer Chalice Mining, their shares soared, catching investors' attention. Moving on now, energy stocks gained with Woodside Petroleum and Santos shares rising on the board. Last week, OPEC Plus resumed talks on increasing oil supply a day. That's after the United Arab Emirates blocked a deal. The standoff could delay plans of higher oil supply through the end of the year to cool surging prices that have already soared to 2.5-year highs. Meanwhile, copper prices traded higher as market participants regarded the recent downturn in industrial metal as a buying opportunity supported by upbeat US jobs data. On that note, ASX-listed copper players Oz Minerals and Samphire Resources traded in the green zone. Moving on, next in our show, let us now look at some ASX-listed stocks under the spotlight today. To begin with, Australia's only listed airport, as mentioned, Sydney Airport. Their shares skyrocket 37% on receiving a $16.7 billion takeover offer. A consortium of institutional investors led by IFM Investors has launched a takeover bid for the airport, pricing its shares at $8.25, a 42% premium on the Friday closing price. The institutions behind the deal include IFM Investors, the giant fund manager part owned by super funds Q Super and Global Infrastructure Management. According to the airport group, the indicative proposal has been made during a global pandemic which has deeply affected the aviation industry and the Sydney Airport security price. However, the indicative price is below where Sydney Airport security price traded before the pandemic. Having said that, the offer is contingent on pension fund UniSuper, which holds a 15% stake, agreeing to reinvest its equity interest for an equivalent equity holding in the consortium's vehicle. Airport operator Auckland International Airport lifted off on Sunday on Sydney Airport's takeover bid. And on Thursday, the airport says it expects a steady recovery in calendar year 2022. Moving on now, shares in infant formula maker the A2 Milk Company jumped on scoring regulatory approval. A2 Milk says that the New Zealand government had issued approval to its acquisition of a 75% stake in the Matura Valley Milk. And now it's time for a very short break, but stay tuned. I'll be back with some more trending updates for the Australian market.
Hi, this is Andy Liu broadcasting from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Media Studio in Australia, and I'll be hosting the new 𝐊𝐚𝐥𝐤𝐢𝐽 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐚𝐥𝐤𝐢𝐽 TV and join me.
and welcome back. This is Rachel, your host, live from 𝐊𝐼𝐴 Studios, and you're watching the show, The Market Movers. Let's now look at a few stocks bucking the overall positive trend. Risk management services provider Ava Risk Group witnessed the best day in 5 months on hiking guidance. The group has hiked its profit guidance for the financial year 2021. The EBITDA is expected to be between $14.8 million and $15.8 million. That's on revenue of $64.8 million. Notably, the EBITDA forecast represents a 100 to 114% increase from the financial year 2020. Logistics provider Qube also caught market attention. Qube Holdings shares rose on a deal to sell Moorebank Logistics Park. The company says it would sell all its interest in the Moorebank Logistics Park to a consortium led by Sydney-based logistics company Logos Property Group for $1.67 billion. Notably, Qube would retain ownership of the intermodal rail terminals in the facility after the sale of interest. The company expects to receive $1.36 billion in gross pre-tax proceeds on completing the transaction. Moving on now, Property Group Stockland rose on its acquisition plans. The group has admitted it's in talks to buy 𝐊𝐴𝐿𝐶IAN Group's land lease communities business for an unspecified value. It said there's no certainty around any agreement, and the potential transaction is in line with its stated strategy to grow its land lease communities business, which has an approximate 3,000 lot pipeline. The donor management system for charities Pushpay Holdings dipped during early trade amid news of the CFO hunt. Pushpay are looking for a new US-based chief financial officer after current CFO Shane Sampson announced his resignation. Shane is set to join corporate travel and expense solutions provider 𝐊𝐴𝐿𝐶iA𝐿. Next newsmaker worth looking at is gaming and entertainment group Crown Resorts. Their shares slid on updating earnings to reflect COVID. Crown expects to report theoretical earnings before interest, taxes, depreciation and amortization before closure costs and significant items of between $240 and $250 million. The group expects to record a statutory loss after tax for the full year ending 30th of June 2021, with the results subject to review. On top of the lockdowns, Crown has been hit by a series of scandals, from reportedly knowing dealing with tour operators linked to organised crime to disregarding the safety of staff in China. An inquiry last year declared the company unfit for a gambling licence at its new Sydney resort, and also levelled criticism over the influence of its founder and largest shareholder, James Packer. Crown is also at the receiving end of at least 3 different offers for it. Star Entertainment has offered an all-stock buyout worth around $9 billion, while the Blackstone Group raised its all-cash bid to $8.4 billion. Oaktree Capital is offering to buy out Packer's stake in a deal that would give the private equity firm a 10% stake. Now it's time for a short break, but stay tuned. I'll be back with more trending updates for the Australian share market.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐼𝐴 TV.
Hello and welcome back. This is Rachel, your host, live from 𝐊𝐼𝐴 Studios, and you're watching The Market Movers. Let us now look at a few stocks bucking the overall positive trend. Grabbing the news is gambling player Tabcorp. Their shares edge lower on news of demerging lotteries and Keno. The company has plans to create 2 standalone ASX listed companies operating lotteries and Keno and wagering and media. The demerger is expected to be complete by the end of June 2022. Meanwhile, BetMakers Technology Group, their shares jumped as Tabcorp spurned the offer and opted for a spin-off. Bet had offered $4 billion in May for W&M, a move not taken well by investors. Instead, Tabcorp now is talking to Bet about commercial opportunities in international markets. In the last segment now, let us look at key market drivers this week. While US markets were closed on Monday for the Independence Day holiday, Market participants will continue to monitor other macro fundamentals along with crypto and the commodity charter. The headline June job creation figure in the US beat forecasts, unemployment ticked higher, workforce participation didn't budge and the pace of hourly earnings growth slowed, suggesting rate rises could be further away than markets have come to fear. Minutes from the June meeting are due to be published on Wednesday and might have more details on policymakers' thinking. Also on the horizon this week is a Reserve Bank of Australia meeting on Tuesday, which has markets on tenterhooks because the central bank has flagged a decision on the fate of its bond purchase program and yield market. Investors are closely watching out for the RBA update as the country faces uncertainties from virus-led lockdowns that could impede an economic recovery. The Reserve Bank of Australia isn't expected to move its cash rate, but economists expect it not to extend its 3-year yield target beyond the April 2024 bond and to adopt a flexible approach to bond purchases. Well, that's all for now. I'm signing off. Stay tuned for more live updates on Kalkine TV across the economy, markets and sectors. I'm Rachel, signing off for now.